Imagine waking up one morning and finding your dollars suddenly worth a fraction of what they were yesterday. Sounds dramatic, right? But behind the headlines and the reassuring speeches, there are troubling signals that the US dollar's dominance could be slipping faster than most people realize. Today, we're pulling back the curtain on the hidden signs you need to see before it's too late. If you care about your savings, investments, or just the stability of the economy around you, this is a video you'll want to watch until the end. The US dollar has been the backbone of the global financial system for nearly a century, but times are changing, and not necessarily in America's favor. Let's break down what's happening, why it matters, and how it could impact your everyday life. A brief history of the dollar's power. To understand whether the dollar is collapsing, you have to look at why it became so powerful in the first place. After World War II, the Bretton Woods Agreement pegged global currencies to the dollar, and the dollar itself was backed by gold. Even when President Nixon took the US off the gold standard in 1971, the dollar remained the world's reserve currency. That meant countries all over the globe needed dollars to buy oil, conduct trade, and build up reserves. This dominance gave the US incredible leverage. It could borrow cheaply, sanction adversaries, and print money during crises without immediate consequences. But as the saying goes, what goes up must come down. Over the past decade, new cracks have formed in the dollar's seemingly invincible foundation. The rise of alternative payment systems. One of the first hidden signs of trouble is how more countries are trying to bypass the dollar entirely. China and Russia have developed their own payment networks, like CIPs in China, as alternatives to the SWIFT system, which is dollar-centric. The European Union has floated the idea of creating a rival to SWIFT to avoid US sanctions. Even more telling, countries like Brazil, India, and Saudi Arabia have started trading oil and commodities in other currencies, especially the Chinese yuan. That's a big deal because oil trading in dollars, known as the petrodollar system, has been a cornerstone of dollar demand. If this trend keeps growing, fewer countries will need to hold dollars, weakening demand over time. Record US debt and the debt ceiling.